Have you felt betrayed and cheated by your trusted advisor? They showed you policy growth of 6%, 8%, and now suddenly you are in a need of money and you want to withdraw something, but the policy doesn't have enough cash in that. Does it sound familiar to you? Yes. Today I'm going to review the product called Futura. It's offered by Zurich International, very popular product. So I'm going to do the review of that product today so you understand that how this policy actually works. Knowledge is power when it is applied. Hi, this is leenaparwani with you. I share my video every Monday. So you can subscribe to this channel by clicking on this bell icon so you can be the first one to receive the notification on my upcoming videos. And if you have any requests, please do tell me any product review. If you want me to do that, I will address that for you. So today we are sharing the product review of Zurich Futura. What is this product? How does it work? How does illustration work? So I'll share with you how you can read the illustration well and feel empowered that you know better. Nobody can tell you that, okay, you pay for 7 years, 10 years and don't pay anything after that, but you can encash the policy. Yes, this is how sometimes people understand it or sometimes missell it. But if you have your own knowledge, you will not be victim of that. So let's look at the 10 things which you should know about Futura before you invest into that. Or if you've already invested into that, understand your policy. Have this kind of a review within yourself. Number 1, this is a whole of life policy. You can refer to my previous videos. What is whole of life policy structure? So you will know what I'm talking about. This is a whole of life policy structure. In Dubai, in UAE actually, not many are products, whole of life structure. Only a couple of companies do offer this whole of life structure. Number 2, it is a permanent solution. Yes, that's as I said, it is a whole of life policy. So whole of life policies are technically meant to be a permanent solution for your life insurance away from your level term or term insurance policies. Number 3, minimum age of entry, 18. As soon as your child turns 18 or you want to give the child a policy, you can start from age 18. It saves your premium significant way. If you have purchased your policy in age of 40, 45 or in 50s, you can compare the same cover premium for your child turning 18. Number 4, cash values. It builds the cash value over the period. Number of years you pay in that, it has an element of investment into that. Please listen to my word carefully. It has an element of investment into that. I'm not saying this is an investment policy. Number 5, flexibility. It is one of the very good flexible product. You can increase the cover, you can decrease the cover, you can increase the benefit into the same policy or decrease the benefit into that. So when people go into trouble, they can probably relook into the policy flexibility mode and see what that can be done rather than completely letting go of the policy when you are in trouble days. Or on the other side, when you are in a good days and you know your income level is gone high and you want to buy a bigger policy, better policy, you have a choices available to upgrade the same policy as well, subject to some conditions. Number 6, number of year payment. How many years you can make a payment in that. Zurich policy, especially Futura policy, allow you to pay all lump sum premium at one time or between 7 to 30 years, you can make a payment into that. Or you can do continuous lifetime payment as well if you choose to. So you have options available there. So 7 year, 10 year, 15 year, 20 year are one of the most popular term periods people like to pay, and depends on what age group you are in or what kind of pocket size you have it. If you don't have a pocket outflow issues, you can finish everything in 7 years, or if you think that you don't want a big outflow from your pocket, then you can choose for 15 and 20 years as well. Number 7. So number 7, illustration rate, growth rate of illustration. 6%, 7%, 8%. Please do very carefully check your illustrations, which is with you. When advisor take this policy upon you and they share the illustration with you, you can check what is the percentage of illustration that been shown. By the way, there is an impact of that very big way on your premium. If you take a bigger projection, let's say 7 and 8, your premium will be lower. But if you take a projection of 6%, your premium is actually slightly higher, but that's more realistic. 6%, when I say that, do not misunderstand that this is the premium which you're paying. Everything is going towards investment and that's going to give you 6%, 7%, 8% returns. No, it doesn't work that way out. Policy has its own charges and regular maintenance charges, fund charges, all that taking place in your cash. Then the balance only goes into the investment part of it. So do not misunderstand this policy as investment policy. But that has a beauty of element of investment which keeps your policy alive for a number of years. How much amount of cash actually goes towards the investment? It is also mentioned very clearly in your policy document. Let's say first 2 years, there's nothing goes towards investment. Third year onward, 97% goes towards investment, and so as in the future, different structure. You can check in your policy how it shows. You can look into this smaller video as well, and where I'm explaining how to read the illustration. Let's look at that.
Here is a Zurich Futura illustration as I share with you. This is how it looks like. So the feature which you need to see and verify in the illustration to understand the illustration, as you can see here, date of birth, male, female, it matters the pricing. Also the smoker, non-smoker status, which also impact the pricing, as well as the nationality. All right. Here is the second page which you need to see as well. This is what it is. So you see the terms which is mentioned and which you can always see that it's modifiable. So you need to know what is in your terms. This is a sample of single life. That's what it mentions, single life. And vanishing period, that means you choose to pay only 15 years. Remember, I told you 7 to 30 years is the time period you can pay for it, or whole of life as well. So 15 years chosen by here, whole of life. And yeah, and coming down the cover, as I'm showing you sample of life cover. In this sample, I've not added any other rider, which I can show in the future to you. What I'm adding here is the sample for waiver of premium cover. As I told you, if you have only life cover, it's recommended you get this one added up always. Aeroplane cover always come by default, so nothing to worry. So as the second opinion, Zurich gives by complimentary as well. So that comes in it. What else you need to understand in the illustration is another most important thing. What rate of illustration is being projected for, what rate it is impacted on your premium. Remember, we spoke about 6 to 8% usually. This is how you can see this here. This one is projected on 6%. Some people do on 8% as well. Both are okay, but you should know the consequences ahead, and also see how it works. In this, as I mentioned, you're paying for 15 years. So the client had paid for 15 years. After that, there is no more payment, okay? So 27,000 client had paid it in 15 years. And look, the cash value, how does it look like? Look at this section on the 6%. So it's 26,000 is the cash value lying there. So you are somewhere near to the break even. What you paid, almost there you are if the policy on a 6%. What if on 8%? Maybe it will show earlier, but when you do review every time, you check your illustration, what was projected and what is the policy currently running on that. So as you can also see, first 2 years, there is no cash, right? There's no cash assigned for investment. It only goes for expenses, policy-related expenses. And third year onward, a partially amount goes towards investment. So as every year after the charges, the balance goes for the investment. So the policy basically can survive for lifetime or age 99. And you can also usually take this sustainability illustration from the insurance company. If your policy in force for quite a few years and you didn't pay, or you do want to reduce the payment, something, we can talk about those modifications in the future. But that's the main thing which you can read through in the illustrations. And if you have not asked for any rider, it shouldn't be any rider there.
Number 8, global cover. Zurich Futura policy offer you a global cover. What does it mean? Like, you can buy a policy when you are in UAE, because Zurich here allows you to take a policy when you have a visa status, you have a residency proof here, so then you can buy this product. But what if you move out from here to different country, you get migrated somewhere else, this cover goes on with you wherever you go. We have several clients like those who moved out into Australia, Saudi Arabia, Canada, but the cover is still there. There's no changes in the cover. And depending on the country where you move, depending on their laws, you can still continue to make a payment in this policy. Number 9, this also can be taken as joint policy structure. Yes, husband and wife can be taking a policy together as well with different cover into that, but they can still have the joint policy structure in this policy. I personally look at it taking a separate policy, especially when we are living in the country like Dubai, UAE, where the laws are very different here. I would prefer, like how we advise people to have a separate will, similar manner, have a separate policies. Unless you have a cash flow issues, then you can go with a joint policy as well. Number 10, you can also assign this policy to any bank. If you have any mortgages or anything, you can assign this policy as well. Well, I personally don't use this policy for advising any client to assign this policy for the bank mortgage purposes unless you have nothing else to share with them. This is the policy which is actually used for personal matters, and it is expensive as well. So yeah, before you assign this kind of policy to bank, think carefully, or you have another alternative, use that one. I'm doing this review based on recent experiences of mine in these COVID days when people had a lot of complaint related to their policies. I'm not endorsing any product. You can always take the product based on your choice. My job is to share my reviews with that. So let's talk about what is not good and what is good about the policy based on my opinion. So what is not good? Number 1 item, don't fall for illustration growth rate 6 to 8%. As I mentioned before, this is not an investment policy, but this is a very good product for lifetime coverage available to you. Number 2, if the policy is projected on higher growth, 6 to 8%, let's say if this is an 8% policy projected, if the policy doesn't perform as per 8%, which you can see number of years when your advisor do review with you, that what was projected versus what is the cash value now. If the cash value is really low, insurance companies have a right to tell you that, hey guys, you may need to pay a little bit more longer because your policy is not running as per the projection. That is number 1 can be. Number 2, they can tell you, by the way, if you don't want to pay anything more, the policy cover may come down from 99 years to as per sustainability. You can always ask them the sustainability report and they can tell you now this much premium paid and this much is the only cover. Higher projection, people really fall for it because they like to see the lower premium, but it has the consequences as well. Although it is not guaranteed you will have the situation, or it's not guaranteed even the 6% that you will never have a situation, it can happen in the future anyways. So that's a little bit of risky part there in this policy as well. Number 3, this is also expensive. Yes, it is. People find it relatively expensive policy if you compare to other products in the market. This is a slightly expensive policy as well compared to other whole of life policy structures. But then this is what it is. The good part about this thing, this policy is serviced by, of course, Zurich. So good part is Zurich is amazing with their services. Yes, because I personally have the experience on the service. They issue the policy faster. They pay the claim much more faster. I think that's the reason they are charging a little bit more also. But yes, that's where the service is also amazing there. People getting paid in just 6 to 7 working days when people are in need. I think that's the best thing people wanted. So yes, I will give a right tick to this, a best service on the Zurich. Number 2, it is also good for people who like to see money back type of policies. Because in UAE, not many products are money back. So whole of life policy, it has an element of investments. So let's say, example, if you pay 15 years and after 15 years, let's say you made a payment of $50,000, You may see in the policy itself a break-even point at 15th or 16th year, and that money can be really used if you are in a need, or maybe you can have a partial withdrawal from there and let the policy also be there, cover be there, but of course not for 99 years, but it kind of a policy comes handy sometimes when people are in a need. So that's good for some people who really like to see some money growing in that and want to have a look of kind of a money back type of structure. Number 3, it's also good for people who wants to have a flexibility in that. Especially in UAE, I see people who like to have a flexibility in their plan. We never know what happens to your job or your business or something, but at least this kind of a structure gives you a flexibility that you can reduce or increase the cover into it rather than canceling the total policy. Or if you don't have money in between, you can take a break, premium holidays, and then can continue payment a little later. Those kind of flexibility really comes handy when people are in need. Overall, this is one of the best products in terms of whole of life structure. Before I sign out, don't forget to subscribe my channel by pressing this bell icon so then you can see my next videos upcoming. And do tell me if you really like this video. Was this information useful to you? Do you have a future policy? Did you ever had any kind of experience which was unpleasant for you, or you are now well informed? Share your experience with me by telling me on the comment box that yes, YES, just write yes, and I will hear your feedback that this information was relevant to you. Last but not the least, Futura product is also being revised, and in the near future you will see a new version of this product. As soon as this product is released, I will share the feedback and review on that product. What I shared today is the product available right now. This product also has several riders into that, which we will talk about in next episode. Watch out for my next episode for the riders on this policy. And what is riders? Check out.